everybody, welcome back to the channel. On today's video, I want to talk about Dream Impact Trust. It's ticker MPCT.UN and it trades on the TSX. I just bought into this company because I was looking for something a little bit different. You know, on this channel, I'm always talking about big blue chip Canadian dividend payers that I've held for a while, why I like them, where I see them going in the future. Now, Dream Impact Trust is on the come up. This company, this is before all the hype sets in. This is geared towards the future. That's why I'm bringing it up to everybody today. I hope you guys like it. By the end of this video, maybe you'll buy in. If you do, give me a like and subscribe. If not, tell me why you don't like it. You know, I'm always interested in hearing other opinions. I'm not always right. Currently, the price is $6.32 and it has a yield of 6.3% and it pays out monthly because it is a REIT and that's the most popular way Canadian REITs like to do things. Now, this is a residential REIT that's really shaking things up because it has a focus on ESG investing. ESG is environmental, social governance. You've heard this a lot lately. It's been in the media. It's very popular. All the mutual funds, big hedge fund managers, they want to put money into ESG investing. People are not very keen to invest on things that are bad for the planet, perceived negative things for climate change, any of that stuff like oil or weapon contractors. People don't want to put money in that. It's all pouring into good, positive, well-being things like this REIT. This REIT focuses on attainable and affordable housing. So what this means is they're going to have rental units. Now, of a building, some of the units will be below market rent to help the community, to help housing be more inclusive for people who wouldn't be able to afford living in certain areas. So this is very popular right now with the current Canadian government. They've been actually trying to pass a bill lately that states any new condo development must have a certain percentage of affordable housing in it. It's being debated right now. I'm not sure if that's going to pass, but you know what? Dream's ahead of the curve. They're already doing this because it's the right thing to do. They can still turn a very large profit and help people. It's very good. Their apartments are environmentally sustainable, you know, by various methods such as water filtration, solar panels, using different types of material for construction. And they also boast that they're getting vehicle kilometers off the road each year by building these apartment buildings in strategical locations. This one, I don't know, that's a little bit debatable for me. But they're also about having inclusive communities. They want people from different races, age groups, sexual orientations all together in the community, and they do this, which is really cool. I'm going to show you a list of all their apartment buildings. On the left here, they have all their apartment buildings. They don't have 100% ownership on all of these. They have a certain percentage, but still here. And on the top, it shows you which ones are affordable and attainable housing, which ones are focusing on inclusivity, and which ones have a good impact on the environment and sustainability. So I like that they're putting this out for you to see there. It's really interesting. I mean, this is the first Canadian REIT I've seen focus on helping people in the environment. It's really kind of cool, guys. The majority of this REIT is located in Toronto and the GTA. They have a couple properties in Ottawa and one in Las Vegas. Going forward, this REIT is mainly focused on residential, but they do have some office and retail properties as well. They're on the screen here. Not very many, but this is what's up and running as of today. But if we scroll down here to the focus of the future, this is all the residential properties coming soon, coming next year, the year after, 2024, down the pipeline. They haven't determined yet, but you can see the majority of these buildings are focused in Toronto and the GTA. We have a couple in Ottawa and one even in Las Vegas. We're not going to go over every individual piece of property. I'm just going to highlight one to give you guys a little bit of an understanding of what they do for the community here. So this one right here, West Donlands, Block 8, we can see that they give a market rent savings of 63% to 30% of the units, okay? So 70% of the building, they're getting market rent, and that's where our profit's going to come in and we're going to get our money every month. But 30% of them are going towards helping people, making the community inclusive. I don't mind that, guys. We're getting a good over 6% yield. We can help some people. I mean, why don't we give back a little bit and still make money? This is the type of thing that more companies should be doing. I like it. They're also highlighting that this building is expected to reduce energy consumption by 27% and reduce potable water consumption by 35%. So these are all positive things, and we're still making a good distribution. Like, I don't know, I feel good about investing in this company. I think more companies should take this ESG investing approach. It's not going to be my main focus of my investments going forward, but I'd like to see it. I think a lot of you do as well. Currently at $6.32, there's a pretty big discount to NAV, but I mean, all these real estate investment trusts always advertise like, oh, we're trading below NAV. That's what they tend to do, so don't get too excited. They're claiming a 27% discount to NAV. I mean, that's kind of in line, so I don't think you should buy this thinking there's going to be a run up to fair value, all right? So also, when you're taking a look at the numbers of this company, keep in mind that a lot of the residential buildings are not online yet. They're coming next year and the year after. So this is why, the price point is pretty low right now because you're getting a lot of return of capital in those distributions. All right, so keep it in mind. Buy this one today, but don't expect great numbers in quarterly reports right now. These new buildings need to come online. I'd rather buy a little bit early than buy too late. I hope you guys let me know your opinion of this one. Let me know if you think other REITs are better investment opportunities. Throw me a like, throw me a subscribe, throw me a comment. We'll see you in the next video, guys. Take care.